Hello and welcome to Talking Stocks. I'm Gugulethu Cele. In studio with me is Glen and Peter Armitage, both from Anchor Capital. Today we're talking about arguably the largest mining company in the world, BHP Billiton. Glen, maybe if you can give us more perspective on this company. I think so often people do get lost into the different subsections that it has, but it is one of the biggest players in the industry.
It is indeed, Gugu, and has been a titan of our index here in this country for many, many years. In fact, for many years it has been the largest stock in most of the headline indices. That's not the case anymore, and part of the reason for that is obviously that the resource sector has been under a lot of pressure, and earnings forecasts are being slashed, and the prices of the assets have come down. But it is indeed one of the largest mining companies in the world.
You mentioned that obviously the resources space is taking quite a bit of a knock here, Peter, and that also correlates with the share price movement that you alluded to here, Glen, because I understand the 12-month high was well above 370 and 12-month low 218. So difficult market to read clearly in resources.
Sure, I think what's happened is resources are always a function of supply and demand. And I think an important thing to understand is the word commodity. It means that I have a piece of coal and you have a piece of coal, they'll sell for the same price. And it's a function of what supply is and what demand is. Now, what's happened is demand has been very strong for many, many years, driven by China, and was growing at kind of 5 to 10% per annum for many years, and that's slowed down. So demand hasn't necessarily, the trend hasn't decreased, but the demand growth has slowed a lot. In some instances, there are monthly drops in demand. But going back, back into 2005 and onwards, a huge amount of money got put into new capacity. So you've got a lot of new supply coming onto the market in many resources, and the demand isn't increasing at the same rate. So the price goes down. One of the biggest of those is iron ore, where the price was well above $100 and got down to sort of $50. It as much as halved, and that's in fact the biggest profit contributor to BHP Billiton. And in fact, most of the major mining companies, other than Glencore. And their second biggest profit contributor is petroleum and potash. They're put in the same category. But obviously the oil price, everybody knows, has gone from well over $100 again down to floating around the sort of 50, 60 level. So if you were selling a block of something for $100 and you're now selling it for $50, it has a huge impact.
There's an interesting graph that we have in your presentation as well, looking at the large downgrades to the full year 2016. Maybe if you can elaborate on this, because looking at the figures, it does make for a scary outlook.
Yeah, indeed, it does make for quite a scary outlook, and earnings forecasts from the analysts have really been slashed and slashed hard. And what we have now is a situation where, in terms of BHP Billiton's last reported earnings, it's on a trailing P of about 12 times. If you look at where analyst forecasts are 1 year out, or for the end of FY15, it's at a 20 times forward, and going 1 year past that, it's at a 25 times forward. That in fact doesn't even take into account commodity prices at current spot levels. It takes, most analysts have prices higher than current spot levels. If you look at spot levels currently, from a commodity price point of view, and translate those into BHP Billiton's earnings, it's actually on a 12-month forward P of over 55 times.
But I understand the benefit here is that BHP has quite a strong balance sheet.
Sure. Yeah, I mean, so two characteristics of BHP Billiton. One is they're a very low-cost producer, so they can sustain, they still make money at these lower prices. But as Glen's indicating, there's high PE multiples, mean that the earnings are coming down significantly. The balance sheet is strong, and one of the distinguishing characteristics with BHP as a share is they promise a progressive dividend. In other words, they tell you that the dividend will increase every year. So, and that's one of the things. So the price is not a disaster. The share price got up to 377. It's trading sort of approaching 300 again. So it hasn't come off nearly as much as the earnings and the multiples would suggest. And a lot of that is attributable to the fact that they pay this increasing dividend, and you've got a prospective dividend yield of 5 to 6%. And they can only do that because they've got the balance sheet to do so.
Let's touch on the commodity cycle. I take it is a difficult one to call, but in your experience, maybe, Glen, is it an easy ride to estimate as to when things might turn around, or again, just based on the market? If there's no demand, then there's concerns about the pricing.
Yeah, in terms of the ride towards forecasting the turn in the cycle, it's not an easy ride whatsoever. And in fact, I think I would make the comment that I would be quite hard pressed to actually see what would kick the cycle upward again. I think share price movements will be volatile around that, and will try and anticipate it to the extent that they can. But to try and put a pin in when the demand cycle is going to change, given what Peter has said about China, and given that the rest of the world is not exactly a shining beacon of light in terms of growth, especially the Eurozone, it's quite hard to actually see when that might happen.
South Africa is not a shining light of hope when it comes to growth expectations, and maybe this also goes into BHP wanting to spin off their South 32 operations here, which has been met with a lot of nervousness, I take it, in the market.
Yeah, I mean, so South 32 is, the skeptics are saying they're taking all the unattractive assets, bundling them together. It's about 10% of Billiton's business.
So not too big in the big
not that material in the mix, but they're putting together, so they're kind of keeping their big profit spinners, the iron ore, the petroleum and potash, the copper, but a lot of the other stuff, and regionally, most of the South African businesses. And one of the results of the South 32 spin-off is the remaining Billiton will have very, very little, if any, exposure to South Africa. So the skeptics are saying it's a way of taking that exposure out, because South Africa has become a very difficult mining destination. But South 32 will have a lot of the commodities that are under pressure, and as a share, it'll be worth watching. There'll be times when it will perform well.
Maybe if you can move into the key focus areas, because I do understand that following the spin-off of South 32, that as you mentioned, the iron ore, the petroleum and potash there, and you've got some expectations with regards to earnings, Glen.
Well, I think that a lot of work sort of still needs to be done in terms of that, but essentially, as Peter has said, from a profit contribution point of view, it's about 10% of what is in the current BHP Billiton asset set. So if you just draw a reasonably straight line through that and you apply the same multiple, it should list at approximately a price of 25 odd rand, or somewhere between sort of in the high teens and the low 30s.
This is South 32?
Yes.
So if you've got a Billiton share, you're going to get one South 32 share.
Exactly.
So that's why the 25, Billiton's sitting at between 250 and 300, so the 10% roughly correlates to the 25 rand.
Yeah.
That's where the logic will come from. So it'll be quite interesting to watch, because it'll be 10 times roughly, it'll be interesting to watch the two shares relative to each other. You'll be able to see quite easily which one's performing better.
Without giving too much away with your positions, buy, hold or sell on this particular stock, which we'll get into in a moment or two, is it a difficult one to call, especially given that the deep value investors continue to find opportunity here? Those who like the company, and as well as the weighting that it has on our local exchange and abroad, also prefer the company purely because of its weighting, and view it as such a stock that you can't necessarily exclude. From your perspective, do the numbers add up, the valuations in particular?
Yeah, I think that's a very good question, and I think that in the short term, at the time of the listing and thereafter, it will perhaps trade, and its price will be set on non-fundamental issues, and that will be a demand and supply driven thing, because essentially it's not going to be, or as Peter has said, it's a very simple one-for-one share deal. If you own a Billiton share, then you're going to get a South 32 share. But it's not going to be listed or dual listed on the same basis as the parent company. So the parent company, in fact, is split into an Australian listing and a London listing, which is a dual listing with South Africa. When South 32 lists, it will be it will be fungible in all of those countries, and it will be an inward listed stock on our exchange. So it won't have the demarcation and the separate market caps that BHP Billiton have got in Australia versus London/here.
But it's time now to get the view of our experts. Buy, hold or sell? Peter, from your perspective, buy, hold or sell BHP Billiton?
I think in the context of the mining sector, it probably is the quality stock. You know, it's got very low costs in it, which is where you want to be when commodities are under pressure. From a resources perspective as a whole, Billiton is pricing in commodity prices much higher than they are today. So there's no margin of safety. It's not something that I'd want to own. But you know, at the right commodity shares, it's an unemotional thing. It's neither a good business nor a bad business. It's at a point in time. At the moment, the business will be battling with its profits. The share price hasn't come off that much from its high. So we think it's still pricing in too much good news. So you say sell or? Yes. Sell it is. Do you agree, Glen?
The dividend yield to me here is the key, and the public statement that let's call it the core business has made, and what will be the biggest part of BHP Billiton going forward, has said that they will maintain the dividend, and that would be at an absolute level post the spin-off of South 32. Now that'll put it on a pretty punchy dividend yield. So I think there'll be a lot of analysis as to whether they can actually pay that dividend out of free cash flow, or whether or not they need to borrow. And certainly at current commodity prices, they would need to borrow. I would say within the next 12-month period. So I would cop out a little bit and say hold. South 32, I think you're going to get better chances to actually buy it than at the time of the corporate action.
So we've got a mixed one here, coming both from Peter and Glen, our experts from Anchor Capital. Well, that's where we do have to leave it for the show today. Do join us again next time where we talk more stocks.